breadcrumbs out there, okay? They're going to follow. But that's different. That's broker previews. But think about this, okay? I mean, why go out and spend all that money on an open house? You know, they're going to walk in, take a bottle of water and a handful of candy, and they're going to walk out. They don't buy the house. They live down the street. They just want to see it. So think about that. You don't want to spend money that you don't have to spend. Now, we talked about equipment earlier. And on equipment, when you buy equipment, like computers or not repaired, but you buy computers or you buy a printer or whatever it is you buy, it's 100% deductible. Now, here's the rules on it. And we're going to see if Bruce is paying attention here. Okay? Usually Drew's here and I pick on him. Where's Drew? Huh? Sleeping. Okay. So Bruce goes out and he buys some new equipment. So I tell him, wait a minute, let me tell you what the rules are on new equipment. If you want to write off the new equipment all at one time, you have to use it in the office. You have to use it in the office. So now, if you tell me, I asked the question, if you use it in your home, it has to be depreciated over 3 years. Doesn't make a difference whether the equipment's going to last that long or not. So I asked Bruce, I said, Bruce, he knows the rules now. Now I'm going to ask a question. Where do you use the equipment that you want to write off all at one time? Where do you use your equipment, Bruce? He's thinking.
Office.
He uses it in the office. Thank you, Bruce, you passed. If you don't say you use it in the office, then you can't take it all at one time. Okay? So now, he gets audited. So I come by, and I'm going to take a picture of Bruce and all the equipment he's got. Now, there's all kinds of computers back over there, way over in the corner. So I'm going to go over there and take a picture of Bruce, but he's not there. Okay? And I look around and maybe it's Drew. Drew's not here, so I'm going to pick on him anyway. So Drew's here. So I say, Drew, sit down in front of that picture. I'm going to take a picture of you. I take a picture of Drew with equipment. I go to the IRS audit, and I say, here's a picture of Bob sitting there in front of his equipment, Bruce sitting in front of his equipment. They don't know what Bruce looks like. I'm there. They don't know what he looks like. Could be anyway. It could be Freddie. If Freddie's here, I take his picture over there. So whatever has to happen, I take the pictures and I say, this is my client sitting in front of all of his computers. Pictures are worth 1,000 words. But there again, those are the kind of reasons that I don't take my client with me, because I know what I can do, what I get away with, and what works and what doesn't. Now there's a lot of new changes going on now in the tax rules. I mean, you hear about it, and you know, you see about everything's going on. You know, they said that and this is not a political thing, but they said that middle-income people will not be taxed. I would say that almost all of you are middle income. Now there may be a couple of you, maybe Bruce, maybe Freddie, you know, maybe you're higher income. But most of you are middle income. Any of you who are middle income think you're not going to pay more taxes? No, you're all going to pay more taxes. Because of simple reason, Social Security, Medicare taxes going up, and the tax brackets are adjusting a little bit. And you may not be able to write off all your equipment at one time. That rule hasn't been solidified, but we think it will be. So we've got some real problems here with these rules, and we won't know more about them for another 2 or 3 weeks. And that's about the time tax season is going to start. You know, I finally figured out how you know when one of these politicians are lying. I finally figured it out. You watch your face very carefully. And you look to see if their lips are moving. If they're moving, they're lying. You know, to me, I ought to be able to believe my president wannabe. And it didn't happen. It didn't happen. Now, we all know that they're going to tell us the moon's blue if that's what we want to hear it. But some of these laws that were passed and were not passed, some of these laws will not be passed for another couple of weeks, and I think that's terrible, because it's hard to do financial planning and tax planning when we don't really know exactly what's going to happen. And that becomes a major problem. And this did happen once before in 1995. Same thing happened. We didn't know what was going to go on until almost the end of January. And that's very difficult for someone like me that wants to be able to tell people, hey, this is what you can expect. The things I'm telling you today are what we know for sure. When I find out some other things, I will fax Neil or Marilyn and let them know what's going on so they can also have that information and then share it with you. But the main thing we're dealing with today is exactly what's going on, what's happening with tax audits. The IRS has hired a lot of new tax compliance officers. And those are the people that handle the majority of the audits. And they're looking for some of these buzzwords, some of these things that you're seeing like gifts. Now you know a gift is only deductible at $25 per gift per person per year. And a family of 4 is 1 person. That doesn't make any difference if that was since 1954 before I started practice. But it's only $25 per gift. So when I do a tax return, I put down gifts, $25 maximum each, and I make sure that if they say it was $600, it's $575 or $625. Okay? If on your tax return, you look on your return and it said gifts $300, is that 1 gift? Is that 2 gifts? You're asking for trouble. This is your tax return. Now you know the rules because it's on that sheet. And that sheet meets the IRS requirements is what they're looking for. This is the kind of thing that they train their people to look for. As an enrolled agent, I get that information from the IRS through a magazine that they put out called IRS News and Notes. And it tells what they're looking for. Only the enrolled agent can get that. Nobody else. Not CPAs, not attorneys, only enrolled agents. I am an enrolled agent, which means I'm licensed to practice before the IRS. I carry a special license that allows me to represent people at the IRS when I didn't prepare the return, allows me to go all the way to district court and appeals, and that's what I do. Right now, we're doing a lot of offers and compromises. That means I have individuals that owe a lot more money than they can afford to pay. I just got a settlement for one guy that owed $350,000, and we settled for $48,000. I've got another one right now that owed $57,000. We settled for $5,000. We do a lot of offers and compromises for people that owe more money than they can afford to pay. So if that's your situation, or you know somebody that's in that situation and they owe a lot of money and they won't live long enough to make payments on it and pay it off, then you want to come in and talk to me about an offer and compromise. These are things, and they've got a new plan, a new offer and compromise plan that came out in May of this last year that really has made it easier to get an offer and compromise through, depending on how much you owe. And what I need to have people do is call me first over the phone. And you know, that's something very important. I do not charge for telephone calls. A lot of you call me. I do not charge for telephone calls. If you want me to call your client on your behalf, I'll do that for you. Then call you back and tell you what went on. But a lot of you have called me, and I return your calls if I'm not in. I always return my phone calls because it's important. You and I, if the phones don't ring, nothing's happening, right? Phones have to ring. Does that mean I'll pick up a client because of that phone call? Maybe. But that's what it's all about, isn't it? You don't get a client just because the phone rings and you answer a question, but you handle enough calls, then you're going to pick up some clients. And that's what I do. And it's all in numbers. You get 1 person to come in your open house, the chance of selling the house is slim and none. You get 20, 30 people, now you got a chance, right? That's what it's all about, isn't it? So my business is the same way. So I return phone calls. I do not charge for phone calls if you have to come in my office, because sometimes I can't deal with it over the phone. I'll tell you, you got to come into my office and see me. I charge $175 an hour. I do not charge for phone calls, but I charge for office time. So if you need to come into my office, or you have a client that wants to come into my office, you know what you can do? If you want me to call one of your clients, or you have a client call me, call the client and tell them to give me a call and tell them you're going to pay for the phone call. They don't know I'm not going to charge you. And that's good business for everybody. Just say, all you got to do is give my name, and then, you know, and I'll take care of it. And I do that all the time with people. And it really works. It's good for you and it's good for me. Somebody asked me a question. You had a question. What was your question? It's a good one. I don't remember it.
The seller that I have currently owns the house and it's in a trust. And it's fully paid for. There's nothing owed on it.
Okay. Thank you. She had a client that was selling a house, and one of the spouses died, and the lady selling the house was really worried. Now, you know, you go into a house and you're talking to somebody, you're going to sell their house, and there's a picture on the wall. You know, and there's a picture of this elderly gentleman, which means he's probably my age or Bruce's age, elderly guy sitting up there. I made it to the elderly, so I'm proud of it. I want my discount pass, you know. I earned it. So you're sitting there and you see a picture of this old guy there, and she said, oh, my husband died. And, you know, for some reason, the husband goes first. I told my wife that isn't going to happen. I am not going first. Not going to happen. Okay? So, you see this picture of the old guy, so she says, well, my husband died. Okay? You got to go into brain mode here. Okay? The husband died. You have to ask, how long ago did your husband die? She says, oh, he died 5 years ago. Now, do you think that that house that they're living in right now is worth the same price it was 5 years ago? No. That means that person has no tax problem because the spouse, surviving spouse, gets a stepped up basis, which means they get a brand new value based on the time of the death of the decedent. So let's say they paid $25,000 for that house 40 years ago, and it's worth $400,000 now. Now she's a single lady. What's the exclusion for a single lady? $250,000, okay? But the house is worth $400,000 now, and it was worth $500,000 when the old guy died. She has no tax problem. The $250,000 doesn't even need to apply. She has no tax problem because she gets a brand new basis. Let's say that that couple owned 5 rental properties. They get a stepped up basis on every one of them. There is no limitation. And what I'm telling you, there's no ifs, there's no maybes, no could-bes, no howevers. That's the law. They get a stepped up basis on every piece of property that they own based on the time of the death of the decedent. Now, that's where you come in as an agent. You get your property profile or property analysis and you run it at the property value at the time he died. You get a list of all the properties that sold on March 15th of 2005, and you pick out 3 or 4 that are about the same size, square footage as the one they're selling. Take an average of those, and that's the new basis. All of a sudden, this woman thinks she's going to pay one hell of a lot of taxes, and she will pay nothing. Boy, is that going to give you some business? I don't care what gift you give them. That's the gift you want to give them. Knowledge. That's what you want to sell. That's what you want to put out there. That's that cockamamie gift you got them that they don't even need, that they're going to give to somebody else. That's what makes you a better agent. That's what makes you sell more property, and that's what puts money in your pocket. Knowledge. Not that gift. Okay? That's what's going to do it. So these are things you need to know, and that's not new law. Now, they get a stepped-up basis on all property, and property includes stocks and bonds and securities and real estate. It does not include retirement plans. Stocks, bonds, securities, and real estate anywhere in the United States. I have one client that the husband passed away, and she had 23 homes. Got a stepped-up basis on all of them. She started selling them off every couple of years, paying no income tax. Properties were all paid for. Does it make any difference whether they're paid for or not? No. Now, when the wife, the surviving wife, spouse, had better have a trust. Because if she doesn't, then the property's going to go to the state. Now they got probate fees. Your clients should have a trust. I don't do trust. Accountants don't do trust. You need an attorney to do a trust. There are no downsides to a trust. Let me give you an idea. Let's say that I'm the beneficiary of this particular trust. And what the lady does is she really likes me a lot, so she's going to give me her property. Okay, she gifted it to me before she died. They only paid $25,000 for the property. I get the property that's worth $400,000. When I sell it, I'm going to pay taxes on $375,000. Now, if she put it in a trust, and I inherit it through the trust, and I get the property that's worth $400,000, and I sell it for $410,000, I pay taxes on $10,000. You see what a trust does? Holy mackerel! One of the worst things I've seen happen lately is there was an older couple, and they were not feeling well at all. Husband and wife thought they were going to die, so they gift the property to the daughter. About 3-4 years later, they're feeling fine. Hell, they just went on a cruise. They're having too much fun. Now they want to sell the house. They got a problem. They don't own that house anymore. They only paid $25,000 for it. It's worth $400,000. They're going to pay taxes on $375,000. They do not get a $500,000 exclusion. They get nothing because they didn't own it and live in it For the last 3 years, they've been out of it. They deeded it to their daughter. What should they have done? Put it in a trust. Okay? Then they'd have had no problem. They put it in a trust. If you got a listing on a piece of property, and you see that it's in a trust, so what? Doesn't make a difference until they die. They're still alive. A trust doesn't even take a breath until your clients stop breathing. But just because the property's in a trust, that doesn't mean anything. Got nothing to do with anything. Trust and sell the property? Now, will a lender deal with the trust? No. You got to deed it out of the trust, put it in their name, and then put it back in the trust. That's simple stuff. Called a quitclaim. That's what they have quitclaims for. When you run into problems like this, you give me a call, let's talk about it. And normally, I'd say 75% of the time I can handle the problems over the phone. Okay? I can answer all your questions over the phone. But when you come up on stuff like this, a little bit different, and you think there might be a problem, got to call and talk to me. I think Esther has me on speed dial. But that's what it's all about. You know, when somebody comes into my office, and I think they have to refer, they need an attorney, I'll refer an attorney to them. And I write it down in the file. I refer to see Lumsden and Doyle over in Downey. Then I'll go see the attorney. That's not my fault. I did my job. You get a client that comes in and has a problem, you say, hey, why don't you call Earl Salter, and you write it down on your folder. And now if they don't call me, that's not your problem. You did your job. You did your due diligence. And that's very important. You know, on a 1031 exchange, when you take a listing on a piece of property, there's only two types of properties to deal with. Primary residence and everything else. That's it. There's nothing in between. So you take a listing on a piece of property and you see that the address they live at is not the address on the property you're taking a listing on. It's one of these. And a light better come on upstairs. And then you might want to call me and talk to me about it. Or you might want to, we need to find out, say, hey, they could do a 1031 exchange and not pay any taxes. I go to court far too often representing the real estate agent and the broker defending them because they didn't tell their client about an exchange. The last one I handled, the debt was $70,000. The guy went in and had his tax return done, and he owed 70 grand. And he bought another piece of property right afterwards. Same real estate agent. Real estate agent didn't know anything about exchanges. I helped him settle out of court for 35. You and I cannot win a negligence lawsuit in the state of California. You have to be awake. If you think you don't need to know anything about this transaction, this is not the business you should be in. Because it's going to rear its ugly head when you least expect it. And you have to remember, if it's one of these or it's not one of these, you got a problem. And you need to deal with it. Yes, ma'am. You got a question?
On the 1031 exchange, if you have a net sheet and you find that there's a 3 1/3%, will that help protect you?
Nope.
That you
Nope.
describe it to them?
Well, you have to be able to put it in your notes that you talked about a 1031 exchange.
Well, if they've signed the net sheet.
Well, then you're okay. But a net sheet, remember, the net sheet only says that you showed them what the net income would be. Now, you know, when people call me and say, hey, I got a client going to sell a piece of property, and this is the net proceeds. Net proceeds don't mean anything. Net proceeds have nothing to do with profit. That property could be paid for in full or mortgaged to the hilt. The profit is the same. If they paid $400,000 for it, and it's paid for in full, and they sell it for $500,000, they got a $100,000 gain. If they owe $450,000 on it because they're refinanced, the profit is the same. The proceeds mean nothing. Has nothing to do with tax law. Has nothing to do with profits. It doesn't mean anything. Now, if they're going to do an exchange, now all that money has to go to the new property. But all that's in the brochure, and you should all have one of these. You need to keep these in your desk. You need to be able to read the questions and answers in the back. There's 30 questions and answers in the back that'll handle almost any question your client might ever come up with. And I don't want to spend any more time on exchanges. I'll come back and talk to you strictly about exchanges one time because there's a lot to know about it, and they're alive and well. My company last year was averaging 2 to 3 exchanges a month. This was a year ago, in 2011. In 2012, we were averaging 9 to 14 a month. That's because you guys are doing more business. Exchanges are alive and well. People are selling their properties and buying 2 or 3. You can go anywhere in the United States. This brochure handles all those questions. Take some time and read the Q&As in the back. They'll really help you a lot. Any other questions about what it is? Yes,
Of
sir.
the trust, if the values come down when when they die, does the basis go down?
Okay, good question. Let's say in the trust, the basis of the property was 400,000, and when it went through the trust, because the market value went down, the property sold for 300,000. Your client may have a tax loss, okay? Your client may have a tax loss that they can deduct. So that's why a trust is important, and those are the kind of things that I'll help you and your client with. So it's a good question, thank you, Esther. Because there could be a tax loss involved and not necessarily a profit. Okay, good question. Any other questions? Yes, ma'am.
On a step-up basis for rental property, all that depreciation,
What's that now?
the
Step-
depreciation from the years prior to the stepped-up basis.
Okay, if it gets a stepped-up basis, all depreciation is gone. Everything is gone. Let's say they've owned the property for 25 years and they depreciated it to 0. That doesn't even count anymore. They get a new basis and depreciation starts all over again. Good question, thank you. Any other questions?
Earl, Bruce is gonna go nuts.
Yeah.
Is this a good one?
Yeah.
Okay.
I was gonna ask you, it seems like my son, he's in technical sales at IBM, and everybody there work out of their home for their office. And people working out of the homes more, or what's the...
You know, home office deduction is probably one of the single worst deductions you can take on your tax return. That doesn't mean you don't go home and do work at home. But you have to be able to show that you don't have a desk to use here, and that you're a broker and you don't have your license here, you have it at home in your bedroom. Why would you have it there, but you do? But if you have a desk to work at here, and you have your license here, and this is where you meet people, this is your office. You can't take a home office deduction, the IRS won't allow it. 90% of the people that take home office deduction shouldn't have taken it, because they don't qualify. Just because you sit there at the kitchen table, or the desk, because you've got an office that you've made, you know, you got this little bedroom you wouldn't use for anything else. It was a for now room, but now you made it into an office. And that doesn't mean anything, okay? That doesn't mean anything. That doesn't give you a home office deduction. If you're a broker, maybe we might consider that, but a real estate agent, no. You have no right to take a home office deduction, just because you do work at home, okay? Thank you, Bruce, good question. Okay. I'm going to leave you now. I'm going to leave some more papers and brochures up here and things. If you have questions, call me. You know where to find me. Make some money this year. Thank you.
Good job.
Wait.